Some people think technical analysis works. If I can share anything that I've gotten from all my experience, if you find something that works for you, and works means makes you profitable on a day-to-day basis. What is a day trader? A day trader is somebody who slices and dices trades to make money and be green at the end of the day, the week, the month. I don't want to hear, you are not successful if you made 50,000 today and then tomorrow you are down 80,000. Or you are long a stock and you are up $30,000 in it, and you turned a winning trade into a losing trade. One of the great problems of the market, turning a winning day into a losing day, turning a winning trade into a losing trade, not knowing when to stop trading when you're losing. The psychology of trading, anybody can hit a button, anybody can enter a stop order, but it's what you do when you get into a trade. As I said, executing a profitable trade and a bad trade correctly are the same thing. It's following rules. Anybody who tells you they day trade and they never lose is full of BS. A lot of people out there are showing you after the fact trades, and there are guys who are doing pump and dumps. They just indicted these guys on Twitter Space who created a huge Discord with hundreds of thousands of players. It's an old Jordan Belfort, Wolf of Wall Street pump and dump, where they would create, and they do it here every day. It's being done. There are bad actors, bad players, right? Because everybody wants to get rich, right? So there are guys who create these huge Discords. They get a big community. They have a chat room on Twitter Space. They're all talking about trading the market. Then they will go out and buy a bunch of stocks, some of them penny stocks, some of them cheap stocks. They'll tell the community, I like XYZ. They'll rush in, and while you're buying it, they're selling it. Yeah. Trust me, they got indicted. Some poor schmeck got indicted for $100 million scam against retail traders, pump and dumping them. I beg of you all, call me, email me, DM me, whatever you need to do. There are more bad actors in the space than good. As I said, the world we live in now and the market we live in now went from a 200-piece puzzle to a 1,000-piece puzzle. You could be in a stock. The earnings are out. Great guidance, great earnings, great revenue, and it goes down $50. One of the things that people need to note, which has never happened before, it's happened over the last 5-6 years post-COVID, is that we've rarely seen a day where there's been less than a 1% move in the market and as much as a 7% move. Well, if you're on the wrong side of that kind of a trade, it's very painful. Those are trades you may not come back from. So I beg people to do their homework, do their due diligence, learn how to day trade, find something that works, be painful. Those are trades you may not come back from. So I beg people to do their homework, do their due diligence, learn how to day trade, find something that works. Okay, use stop orders, I beg you. When you get into a trade, have a plan. Why? Ask yourself the first question, why am I buying or shorting this stock? Did some Uncle Herbie on the internet tell me to do it? Did I see it on Reddit? Am I watching some internet schmutz? Or does it set up technically? There's only two reasons to buy a stock, price action and technical analysis. In this market, it goes down 1,000, up 1,000 in one day. These are moves that used to take a generation to move. Unheard of to think that in the morning we are in a bull market and in the evening we're in a bear market. That used to take a generation to happen. So if you're on the wrong side of a day trade in a market like that, you're screwed. Okay, so have a plan when you get into a stock. Why am I buying or shorting this stock? Okay, have an exit strategy. Have a stop order on every trade you do. You buy 100 shares at $50, and we believe on every order you do, put in a stop order. I mean, I'm talking every order. As I described to you before, there are people who use a stop order sometimes and not, and they lose 8,000 when they only made 400. No matter what you do, have a plan when you get into a stock. Why? Because price action and technical analysis tells me to do it. It's found its support and resistance. It's a moving average trade. It's a trend trade. It's a far from moving average trade. It's a double top, double bottom, whatever. There are 5 really great technical analysis trades that we teach. And then there are criteria that must be followed for each one of these trades. And each one of the criteria must be fulfilled. If you're in a trend trade is when a stock is going up for more than 30 minutes and it pulls back to the 9 or the 15 EMA, you buy it, okay? And then the minute you get into it, You put a stop order in 1% below the price of the stock. If I buy 100 shares at $50, I put in a stop order at $49.50, down 50 cents. If it goes against me, and it can do that for any number of things. Somebody shouts something out on the internet, a war breaks out, the market turns south, they have a bad bond auction, any millions of different, 1,000-piece puzzle worth of stuff can happen. Doesn't make me a bad trader. I got stopped out on the stock, but all I lost was 50 bucks. So if it goes against me, I'm out. Yeah. Okay? Never change a stop order. Never go, oh, it looks like it's getting to me, I better change it to $48. Never change a stop order. Strict discipline and consistency. Psychology of trading. If it goes up to 50 and a half, I immediately sell half of my position. I have money in the bank, cha-ching. Trading from a positive P&L is the greatest confidence builder in the world. I then move my stop order up from 49 and a half to 50, locking in break even. How wonderful is that? I just made 50 bucks and now I cannot lose money on the trade. What a great feeling. Okay, this is the exact opposite posture that losing traders do. Okay, so you get into a stock for the right reasons with a plan. You put in a stop order. If it goes against you, you get stopped out. Goodbye, good luck, it's okay. If I start making money, I sell half of the trade, 50%, 100 shares, I sell 50, up 50 cents. I lock in a little money, I move my stop up to break even, now I can't lose money on the trade. Well, now I can do anything I want. We recommend, at 51, we sell 25% more of the trade. We move our stop order up to 50 and a half, locking in a $0.50 profit. So I'm riding pretty. I'm driving down the highway in a Tesla. No recommendation of Tesla. But you know what, you see what I'm saying?
Yes.
As opposed to buying at 50 because somebody told me to, having no stop order. Yeah. It goes to 49, I say, oh shit, I buy more. Yeah. It goes to 46, I buy more. By the time it goes to 42, I'm down $8,000, I'm nauseous, I'm puking outside in the wind, and I sell it. And inevitably it turns around and goes back up. Yeah. And I got to find someone to blame for that shitty trade. Definitely. If you're averaging into a trade, you're in a bad trade. Yes. Plain and simple. Mm-hmm. So then, once I've sold half of my shares at 50 and a half and 25% of my shares at 51, and I brought my stop up to lock in a $0.50 profit, then with the last 25% of the trade, I put a trailing stop, and if it keeps going up, I just keep making sales along the way.